Vic Joshi, C2 Financial, home of free mortgage consultation. The Warriors are going to start a historic series against Cleveland Cavaliers today for Game 1, and I'm looking forward to being at the game. The Warriors will take this. We know they will. Just a matter of how many games. I'm thinking it'll happen in 5, but certainly hope it doesn't go 7. I'll take 5 or 6. Anyway, go Dubs. Today I want to talk a little bit about credit. So there are 3 criteria for mortgage approval, basic data points that we're looking at. Number 1 of those 3 is credit. Number 2 is income and liabilities, debt. And number 3 is down payment or liquid assets or assets in general, liquid and non-liquid. So let's talk a little bit about the number 1 data point that we're looking at to give a mortgage, which is credit. And that's credit scores and depth and breadth of credit. How much credit do you have? How long have you had it? And is there any derogatory credit? Are there any collections on credit? Those types of things. Obviously, the higher the credit score, the easier it is to potentially get a loan, the more loan products that may be available to you, and also the lower the interest rate that you may possibly be able to get. Credit score relates directly to interest rate with most mortgage products. There are some exceptions, such as certain types of government loans. Federal Housing Administration, FHA, and Veterans Administration, VA loans are less credit driven, but for the majority of mortgage products, credit is the number 1 criteria that we're looking at before we look at items 2 and 3. So I offer a service where I will do a credit report, run a credit report for a client for free if we get to the point that I'm taking an actual loan application to try to either get the client pre-approved for a mortgage to purchase or to work on a refinance and approve them for that. I will not run credit for everyone free. If I vet the client first and see that it doesn't look like they're really going to be able to make the cut overall, then maybe it's not worth it for me to run their credit. And running credit does count as an inquiry against each individual's credit report. And those inquiries, if they are done over and over again over a short period of time, it can have a large effect on the credit score. For the most part, you can run your credit as many times as you need to when you're shopping for a mortgage within a 30-day window, and all of those inquiries will count as 1. And we typically see the scores drop about 5 points or so on that 1 inquiry. So back to credit, if you have less than perfect credit, can you get a mortgage? Yes, you can. You may have to pay a higher interest rate. We may have to go to a less favorable loan product. But the other alternative is to try to work on bringing up the credit scores with certain simple fixes. The first one that pretty much anyone can work on is to take a look at their credit cards and revolving debt. So that's going to be lines of credit, credit cards, where there's a revolving balance every month that's reporting. And based on the limit on those credit lines, you want to check and see that your balances are less than 30% or so before you run your credit, because that's going to give you a more favorable credit score. In some cases, paying down those balances to 0 can also improve the credit scores. Certainly, anytime your credit is drawn up more than 50% versus the credit limits on those lines of credit, that can have a negative impact on your credit score, and sometimes it can impact by 50 points or 30 points or something significant. So that would be the first fix that you as a consumer or I may advise somebody to do, is to bring down those balances. Then if you have some derogatory credit, meaning late payments that are showing up on credit, if you've got some charge-offs, accounts that have gone bad, that the creditor has written them off and sent them to collection, if you have some collections, those types of things, showing those accounts as paid current, showing those accounts as paid off, that can sometimes improve the score. The best way to deal with those is to figure out a way, if they're erroneous, if they were reported in error, is to get letters from the creditors and try to fix those derogatory items on the bureau level and have them removed from your credit report. That will improve your score in some cases quite dramatically. There are various services out there that offer credit repair. We do not do any of that here. It's not legal for us to do that, and at the same time, it's not something that I really want to engage in. I do have the names and contact information from some credit repair services that I'm happy to pass on to people if they'd like to try them out and use them. I do not gain any compensation from this relationship or from passing that information on to clients, and I truly don't have any actual relationship with these credit repair companies. But it could be a method to get the credit scores fixed and cleaned up. But the ways to do it on your own are, as I just described earlier, and I think that that's the place to start. So, if you have any further questions about your credit, if you'd like to have a free consultation and see what types of options are available to you with your existing credit, and maybe what paths and avenues exist for you to upgrade your credit scores, please feel free to contact me, Vic Joshi, C2 Financial, home of free mortgage consultation.